Welcome to Unlayered, the show where we explore next generation blockchains. I'm your host, Saul, alongside my co host, Dave. And today we are talking to Patrick Bush, Senior Investment Analyst in Digital Assets at Van Eck, and also one of the co authors of this very robust, in depth, and perhaps, depending on your interpretation, bullish report for Solana titled Van Eck's Base Bear Bull Case Solana Valuation by 2030. It went viral and made its ways around the Twitter sphere, especially in Solana communities in the last couple of weeks. And we are super excited to dive into the architect behind this report and all the great analysis of Solana's, I guess, longer term prospects. So, Patrick, thank you so much for joining us today.
Hey, thanks for having me on. It's great to be here. Really interested to have the conversation today. I love talking crypto.
Oh, 100%. Yeah, you're in the right spot. I think one thing I wanted to start with as we talk about this topic is just how do you think about analyzing digital assets from your seat? What sorts of things do you focus on in order to try to get down to whether it's like a fundamental value or just a use case for this chain in the long run? How do you actually do this diligence process, and what do you pay attention to?
Yeah, like the first way to think about it is I liken it to traditional capital structure in a company. So if you have something like some sort of tranche of where the value goes, you might have like debt, equity or whatever else kind of forms those might take. I think tokens are like the next kind of iteration. They're the thing that accrues the least amount of value and is the most speculative. And so it depends on the system. Like some of the tokens are more like securities. I don't think they're securities, but it depends. And so some have stronger value accrual. So it's kind of like the first like way in which we look at these things. And then next is we kind of like to think about is how is the economic system designed? Like that's one of the things I love about the space and why I got into the space is I like kind of figure out how things work. I like economics in general. I like incentive structures, how people maximize utility, all the boring stuff that no one else does. But so we think about, okay, like where is the token value accrual in the system? Like what's the token really related to? So by that, I mean, specifically, like there's a lot of entities that, or a lot of projects that have like dual kind of structure, right? You think about, you look at a VC capital raise, like what do you see? You see like a labs entity, you'll see a token deal. And oftentimes the person invests in it will get money in that equity, but that equity in that entity, that labs entity. And so oftentimes you have to untangle that relationship, like how vested is that team in accruing value to the token? There's some teams where you're like, okay, the token kind of exists as a meme to them. It's kind of a way that they can just like make the team richer or potentially even like just sell a token to like fund a labs entity. But really the sweet sauce, the money all will in the end, if it is successful, may just go to the labs entity. I don't want to out any big projects, but there are some where we're very concerned about that long term. And so going back to like the value case, like if we've established that, that's kind of like the first part of the process. And then we start saying, okay, like what's this economic system? Like what does it do? How does it accrue value? Like what's its capture rate? What's its mechanism, which that it brings revenue to token holders? And that's like the basis of all this stuff.
And so, how long have you guys been looking at digital assets specifically, and has your thesis changed over time? I mean, do you guys also like other ecosystems that are maybe taking a different approach, whether it's kind of the app chain world or even just the modular world on Ethereum? Or has this focus on Solana and this deep dive opened your eyes to, let's call it, the more integrated approach?
Yeah, I think for us, Van Eck has been interested in crypto since 2017. The original thesis is very much like the boomer rock thesis, where everyone looks at gold and says, oh, well, Bitcoin could get disrupted or just could disrupt gold. And Van Eck's a gold firm, first and foremost. I think over half the assets, I think we're at like 80, depending on how the market is, 85 billion in assets. Well, I mean, with Solana, obviously, we 10x that value, right? Because we were all 10x long. Just kidding. But but the original thesis like of the firm was like, okay, like we're going to move off of the gold standard. We're going to move to a more fiat-based system. we think gold is undervalued. And then from there, once you started seeing like this use case for this new basic economic system that was outside of the financial system of all the major countries in the world, you had suddenly an asset that was potentially like parallel to gold but digital, right? And so that's kind of like why they started going to it. So the CEO, Jan van Eck, who's been completely instrumental in making all this happen, decided to invest in Bitcoin and exchanges. So he began like a picks and shovel approach in 2017. Now he wasn't of the first wave, but he definitely did it before it was cool for the rest of the big money class to look at this stuff. Like he was buying when JP Morgan was saying that they'll fire you if you have Bitcoin.
Yeah.
But that's like the genesis of this. And so what's transpired since then is just the real birth of use case for smart contract platforms. So it's always like a really interesting way in which to do these things. Like you have a permissionless system where not only can agreements be made, but they can be made automatically. And then you can build together smart contracts to build functionality that approximates what a company might do. And so that's like a really fascinating way and moving from just like, okay, it's a financial system outside of the system, but now it's not something that's entirely novel. It's new. It's something different. It could actually function on its own. And so because of that, they started looking at different ways to invest in it. Matthew Siegel, the head of research, came on in, I believe, early or mid 2021. And it became a so what for a company like us is like, okay, we want to manage people's investments who want to invest in the space. And so it began with like a managed type L1 fund, which launched in February of 2022. Obviously, not the most apt timing. And from there, it went to a hedge fund. Like I myself, I came in from the proprietary trading world where basically a big rich guy had a bunch of money. He'd say, hey, here's some money. Figure out how to make money out of that money. You don't have any advantages. Maybe like a fast internet speed line we could pay for, but that's about it. Like teach yourself how to trade. And that's why I was at Chopper and DRW. And that's where I got exposed to Bitcoin in the first place, because it was that trading community, that libertarian paradigm appealed to a lot of people. And that's how I got into it. And so going back to like how we're looking at these things and valuing them, it to us, like you look at like a layer one blockchain, that's going to be very differently valued than something like a token for like a DeFi project. With layer one blockchain, it's pretty clear that like this is like a platform. It's a platform like an Uber or an Amazon or like an Apple store, where you're going to have economic activity on it, and there's going to be some sort of take rate of that activity by that layer one protocol. And so the big question is like, how much will that be? One, the activity on there. What will the take rate be? Why will there be a take rate? How will that work in practice? And that's kind of like the basis of all these valuations. So we value this based upon like where the puck was moving. We say, hey, like in like, 7 years, 2030, whatever arbitrary period, 2030 sounds good, right? There's going to be like X amount of revenue for these end markets, whether it's like a banking business or all the financial businesses, right? And we say, okay, like we think maybe like 5% of those could be on blockchain, right? 5% of all the revenues could be on blockchain. Just like, like some percentage of all the taxis are going to be on Uber. And so we say, okay, like here's what it's going to be. And then we're going to approximate some sort of take rate on that value. And so what I've done is look in the past and say, okay, like look through the different blockchain explorers and some of the tooling and some of the things you built in Dune. Say, okay, like if you're a user coming into the system, you don't really think about paying Ethereum versus paying Uniswap. You kind of see that as one cost, right? And then so how that split between Ethereum and Uniswap was the basis of analysis. So something like Uniswap has extremely high take rate by Ethereum. It's something like 40% last I looked. And that's a while ago now. But it's just because the state becomes contentious. The state is valuable and dear to a Uniswap, and people will pay the most for that state when Uniswap trading allows you the most arbitrage opportunity. So like that's conducive to a really high take rate. Long term, you don't think that will stick. So when we have something like finance, banking, and payments, it's probably closer to like a 1-2% take rate. So I mean, like you see like in a credit card, maybe like a high price ETF. And then applying that same logic, we look at something like Solana. Now Solana's like take rate, when we approximated it, it's been like Orca, was 1.5%. So 1.5% of the entire cost of the transaction with the Solana. And that's just because the abundance, because the ability to have cheaper state. So that's kind of like the basis of all these things, was just like economic value and then take rate. And then like within that, trying to unpack from our invisible knapsack of blockchain expertise, as the cool kids used to say, how that happens.
Yeah, I love the way that you guys think about it, and it's so difficult if you try and do like a bottom up valuation, because everything's quite there's a lot of convexity, and the price of the underlying asset affects the TVL and affects the revenue, all these sorts of things. So I think you're going about it in the right way, which is top down. Which are the markets which you think crypto could help to disrupt, and then what sort of percentage, what share do you think they could take? I am really interested in this take rate, and certainly the difference, I think, between your ETH valuation and your Solana valuation, you were assuming, I think, 20% take rate for Solana versus how much take rate there would be for ETH. I'd just love to dig into that and why you think that ETH would be able to maintain such a high premium into 2030.
No, that's a good question, and that's something we don't know, and our thinking is definitely evolved in this as we've seen Ethereum kind of parcel out all the different value adds of its system. So if you're like offboarding like execution as a business, you're offboarding data availability, right? Like you logically think there's a take rate differential that would probably be unfavorable to Ethereum. And so in the original model that I had written on Ethereum, I assumed of the value capture of L2s, Ethereum would take 10% of that. So if you're, or sorry, 90% of that. So if you're thinking like a funnel down from L2 to L1, like a waterfall, like the L2 might take like, say, 2% of the end markets. And then Ethereum would take 90% of that. Now, that really depended upon our view, like on how many L2s there would be. So like my background's econ, but one of my favorite classes in college was this class on offensive realism, which is like a geopolitical international relations class. And it was this guy named John Mearsheimer, who's very controversial, but brilliant. And he talks in the class about different geopolitical systems. So at that point in time, it was like the unipolar moment, unipolarity. There's like one dominant power. And that was kind of birthed out of like the bipolar system, where it was like the US and the Soviet Union. But in past, typically you'd see like multipolarity. You'd see like a group of like dominant countries, right? None of them are hegemons, but they're all kind of dominant in their own little spheres. And so if you apply that logic, I figured that because there was no real way for the L2s to distinguish themselves, they're all open source software, you potentially see like hundreds or thousands of L2s, and particularly if you got bridging right? If you had like, rather than like if you had like a really good highway of connecting these L2 systems of value that was like close to trustless, that basically rests on the trust assumptions of the L1, then they would be interchangeable and they would be not able to distinguish themselves. And that may or may not be true still, but that was kind of the thinking, where it's like, okay, well, all these things are going to have to compete for ETH state. They're going to be posting down there. There's no way to differentiate themselves. So I have to do it on fees. They'll commodify the block space. But whatever that value capture might be, a big portion might go to ETH. And, you know, the pushback is like, what if it's like a tripolar system, or like, you know, there's a few, like a Pareto kind of outcome. There were like 2 or 3 like really dominant ones, and they should probably be able to push back against ETH. And maybe even like, you know, maybe the pushback might be like, what if Ethereum starts enshrining some, right? What if Ethereum picks a winner and says like, okay, we want these like 10 or 5 or however many to get the same kind of advantages. And not those advantages might be programmatically, but they could potentially do something like that. And so that's kind of like how we think about like the take rate. And so in terms of like the Ethereum versus the Solana take rate, that construction is entirely arbitrary. There wasn't like some deep-seated mathematical understanding of that. It was just like, okay, Ethereum take rate is going to be this, Solana is going to be this. I think Ethereum's philosophy is that they're going to have like very dear block space. They're going to go for moneyness. And because of that, their block space is going to be extremely valuable. Everyone's going to want it to some extent. And because of that, they can have a higher take rate. And so the 1/5 is arbitrary. For all we know, Solana could be like 1/100. So it doesn't matter, right? So that's like what we thought was in line with how you see traditional systems at the very least. Like Solana had to differentiate itself through price. People say like, okay, yeah, you want a consumer application won't bring in more users unless it's like 5 to 10x better than something else. Like that's like, some kind of VC babble speak that I hear all the time. So I thought that would be a good starting point.
Yeah, I love the I love the thinking behind it. I think my view is that where we've seen product market fit so far in crypto is people remaining on a single chain. And I think it's very difficult to abstract away completely the UX issues if you have to start moving around. And I think has the announcement maybe of something like Eclipse changed your mind at all on maybe it becoming this trifecta of winning L2s? Because they'll be introducing local fee markets as you have on Solana. So you have less of an issue about high demand, increasing fees for all. And also they're using Celestia for DA rather than ETH-L1, which again is obviously a part of the Ethereum revenue. So yeah, has that announcement potentially changed your views on Ethereum at all?
Yeah, it's definitely pushed us to think more deeply about that initial question, like how many will there be? How many does there need to be? We're actually going to be talking with Eclipse really soon to kind of just understand all the different things they've done and like how we view it changing our model. But it's definitely like open up the question that we need to probably reassess what Ethereum is able to do. And I think it's not atypical. I've been hearing from a lot of people this bear case push back against Ethereum over the last 6 months. And that was based upon the L2 dynamic, the DA dynamic, and then potentially seeing something like, a high throughput layer go on top of it. And then finally, it was also based upon the fact that, it's like narrative formation, like who understands like what Ethereum is going for. And so I think you've seen that kind of come through in price. Like ETH has kind of just been, it's been the banana on the bus race between the different fruits, right? Maybe Solana's the orange, Ethereum's been the banana just sitting there, right? But yeah, that's kind of how we see it right now.
Can you talk to us a bit about, like, throughout your analytical approach to like comparing, I guess, L1 ecosystems, or you guys call them smart contracting platforms? It's probably a better term. I think one thing I see oftentimes in the crypto Twitter sphere is anytime someone brings up something like TVL, for instance, it's like you have 50 people saying that's not a valid metric. It doesn't mean anything. And this week, especially, maybe those criticisms are true. Solana did like $500 million in DEX volume on TVL of like $500 million. And ETH is obviously way more and did almost the same amount of DEX volumes. And so people bring up this point of capital efficiency, which maybe that's true. Maybe, I mean, it's not super clear to me that Orca is that much more capital efficient, but maybe it is. I guess my point is, how much value do you put into something like TVL? I noticed in like the concluding paragraph of you guys' report, that was almost a criticism of Solana, and it's something that I've criticized before too. Is like there's just not a lot, there's not massive pools of capital here, but perhaps we're seeing firsthand that the critics are right. I guess, like, how do you think about that?
No, I think TVL is incomplete. I think you have to pair it with like how many stable coins are on chain. And then to the other point that people talk about is capital efficiency. So we're looking at like something like a GMX versus a DYDX. Like you see there's a lot higher turnover on like the DYDX capital that's there versus something on like a GMX. At least that used to be a case for a very long time. So it's definitely incomplete, but it's definitely a good like rule of thumb to just kind of see like how interested people are in using the chain locking value to it. But it also presupposes that like the dominant paradigm is using DeFi, right? Like if you lock it in a contract, it's counted, someone's going to be tabulating that. And how it's tabulated is also like controversial as well. Like do you include like liquid staking derivatives? Probably not. But yeah, I think DeFi Llama does a good job on that as an aside. But yeah, I don't think it's like perfect, but it's a good way of saying, okay, like how interested people in it. It doesn't tell you anything about the 2030 case, right? It just kind of tells you what the users are today. And if the users, that you're looking for and that big bull case aren't there yet, then the TBL is kind of meaningless, right? Like, because that's kind of how we're thinking about it. But I think at least for like interchain comparisons for what we see today, it kind of makes sense, but long term, not potentially.
So you mentioned before on Ethereum about its moneyness properties, and that would attract people to use Ethereum and potentially give it this
I thought
premium.
it was like, it's kind of difficult for people to understand. That was my point. Like, it's kind of tough for people to be like, oh yeah, this is obviously money. Like, duh, I want to buy this, right? Like, it's a bit different.
Do you have any thoughts on how important moneyness is going to be to these valuations going forward for layer ones? What sort of is going to make something good money or bad money? And then also, how can you possibly feed something like that into a valuation?
Yeah, I think that last part is most important.
Yeah.
Because if you start ungluing these different revenue items from Ethereum or like start downgrading them, then like the DCF makes less and less sense. And I've talked to other analysts about this. And it's almost like the underpants known paradigm, where you're just like, the first case Ethereum is useful, and then there's a bunch of question marks, and then the next case is it's valuable, right? Like, there's no real certainty in how it gets there. And so like that glue that holds together his thesis must be some property in moneyness. And obviously, like anyone else, like what's cool about moneyness in a system like Ethereum or Bitcoin is that you know the inflation, you kind of have an understanding that this is going to be what the value is going forward. No one can censor it, no one can take away. I think it's like really important going forward. Like I think like the important like understanding of why Bitcoin or any of these things is interesting is because it's non-sovereign money that no one can take away from you. Like someone's not going to censor you. You're not going to be sanctioned, right? And I think what that means is that you want credible neutrality. Those are the core things ETH talks about. But the problem is that you need to have credible neutrality. Like when ETH talks about decentralization, there's a lot of like different reasons why that's good that don't have to do with credible neutrality. But credible neutrality is like one of the things that like stems from that supposedly. And that's one of the properties they want to go for. So I think like having the money to be credibly neutral is like really important. And when you have like the ability to arbitrarily change things when things are not ossified, you kind of violate that paradigm. Like you don't want to be able to do that. I think the more that something becomes like set in stone, like Bitcoin, the more moneyness it has. Like it's clear because you can't really look at Bitcoin and say, yeah, this thing's going to generate like X number of revenue. Like you don't even know if Bitcoin's going to generate enough revenue to keep the miners sustainable through this happening, the next happening. Like you don't know how many miners are going to go bankrupt in 2024. It could be a lot. That could be like one of the predictions 2024 no one's talking about, right? But going forward, like at least you know that Bitcoin has money. You know that because like no one's building these pie in the sky models that tell you that Bitcoin's going to be used for a lot of things. And so I think that's like a really important discussion that Ethereum needs to have when they talk about, you know, it's like changing the way in which the structure is of the code. So it might favor something over another project, like maybe like the sovereign rollup stuff, or maybe like, or sorry, Shrine rollup, or maybe looking at like them doing things to stop Lido, right? Like those things violate credible neutrality. And I think like in a system like Ethereum, you have a lot of researchers, a lot of people who want to like do better for the world. But the problem, like double-edged sword, is that may take away from moneyness, because to do better for the world, they may want to change things. They may want to continually change things. And from a system of money, you don't want that. And going to Solana, like I don't really think that there's any real one who's going to say it's money now. Maybe in the future, probably not. Like I think Toli's like whole techno optimistic paradigm doesn't lend itself to that. I think he just wants people to use it to do cool stuff. I don't think there's any real push from his standpoint to make it into money, at least how I've understood him talking about the last, 2 years.
But is there a difference between media, like a store of value like Bitcoin hard money, and then a medium of exchange? Because I think those two things get conflated into into this moneyness paradigm. But I think they're two very different things. And do you think that both accrue premium? One accrues more premium than the other? Yeah, because potentially Solana is more of a medium of exchange, if you like.
Yeah, I think it's hard to unwind them though in most practical use cases. at least for like something like Solana. So I say that because there's potential for a lot of different token sinks on Solana. The chief one, of course, is rent. Like every account, every single byte stored in Solana, you have to have some sort of Solana for rent, or you have to have enough to be rent exempt for 2 years. And so I think it like kind of lends itself to people pushing this narrative. Well, we want to make it a little more scarce or dear. But for medium exchange, like it's going to be useful for doing things on Solana. Like all the DeFi is probably base price in Sol, right? And so I don't know, like, is that enough to hold it together to make it like a real medium exchange? Like that's a key question. And you're seeing other ecosystems kind of grapple with that right now. Like Optimism and Arbitrum in the future will have to go through that. Like right now, is doing that. No one talks about is Atom. Atom is like, we have the SDK, we have the so what for through IBC. We have this really cool system. We're trying to build a business, but no one really seems to care about this business. The business is flawed. The business is ICS or securing the exchange may not be necessary, but maybe Atom should be there because it's like the most useful medium exchange throughout the cosmos, right? The downside of that, of course, is like, well, if you're a medium exchange or the base token asset, if people are buying other assets, they're selling Atom, right? And so like, you're seeing like an explosion in Kujira or Injective, maybe like Atom's getting crushed because people enter the ecosystem by buying Atom on Coinbase or Kraken. And then they're, hey, I'm going to buy my meme coin. I'm going to buy whatever's going up and then selling it. So that's kind of like a two-edged paradigm. And it's like that lends it back itself to like the moneyness property, right? Or this medium exchange, store of value, or whatever. Is that kind of happens in like TradFi. It's a little bit cringe to say TradFi, but think about like when like there's a big global financial crisis, right? The first like parts of that, the table is set when like the company in Thailand or whatever the emerging economy of that new world starts borrowing in dollars. And then like what happens is the problem is when there's some sort of hiccup in the global financial system where they need those dollars. So like, in the first paradigm, people are selling their dollars to like invest in like whatever companies are over there and people are borrowing in dollars and it's great, right? But then when the dollar becomes dear, when there's less dollars in the system for whatever reason, like there's a big flight to quality and that moneyness property kicks in and it starves those companies and countries of the dollar and it causes like melee, pandemonium, right? So applying that, I think like that might be like how it goes for like crypto, right? Like the first order is like, okay, this is a cool token. Like, let's get into it. Like, this is the base asset. Let's lend it. And then the next one might be like, okay, you see it's moneyness property when shit hits the fan, right? So that's kind of, I think, a good test.
So in the report, I think one of the interesting, actually the timing of it was interesting just because I think it was right before things really went parabolic for Solana, or rather just skyrocketed in terms of price appreciation. Perhaps it was part of the reason, perhaps not. But I think one of the interesting things you guys did was you you kind of broke down.
I
like,
just want to say that it makes me,
yeah,
it burns me inside that I didn't buy any Bonk or any Solana before I wrote the report.
yeah.
And I loved Solana for a
Yeah.
long time. And it's just like, I see Bonk up
Man.
like 30%. And it's just like,
Yeah,
it
yeah.
hurts.
It went up 50% in one day yesterday.
Yeah.
And I think
It's
it
like
broke
20x.
No, but see, I was buying the middle curve coins. So that thesis is going to play out. Don't worry.
Well, that's actually a good kind of segue into this question I'm about to ask, which is, I think at the time you wrote this report, some of the top gas guzzlers on Solana were like, the Pith Oracle, Chainlink, and some NFT stuff, Magic Eden, some DeFi stuff. I think the current gas guzzlers are much different today, just given all the new activity. But my point is, it feels to me like this space has gotten so overheated in like this past 2-3 weeks. It's almost like the money's looking for something to do. And one of those things to do is, let me just go buy Bonk. A lot of these projects that we've been highlighting, they haven't even dropped their tokens yet. I mean, they're not going to probably do it till next year sometime. I think Pith just, is available as of today or something. So there's one. But I guess like, how are you reacting to kind of like post the report up to now? Massive spike in interest. A lot of Solana assets, especially on the long tail side, are skyrocketing. I don't want to say it validates kind of the thesis you guys had, but certainly it's just like how would you kind of reframe some of the discussion you guys got into, given what you're seeing now, given this most recent data?
Um, it's just like my first reaction is just like anything else in crypto. It's so prone to hot money flows and memes. Like it's really tough to make anything of this other than people are coming around to it when, it's like typically when, people like to joke when you see Jim Cramer saying something, you think the opposite.
Yeah.
But it's like when crypto and the time when you sell, it's not financial advice, but the time supposedly, quote unquote, when you sell is when your mom texts you, "Hey, what's X coin doing?" Right. And
Yeah.
so with that paradigm in mind, it's like, okay, when Kathy Wood goes on CNBC and it's like, hey, like Solana is a really high potential. She's smart in a lot of ways, but I don't think she knows anything about Solana, to be honest. I think she was just told by her crypto team it's good and high potential. Like that tells you
Yeah.
something. And then to your point, like, yeah, it's all speculative. Like I didn't even know this, but I have a wallet that I interacted with like Radium and Saber, God rest them in peace. And Orca from like 2021. I saw I have a Klanosaur on it.
It's amazing.
And yeah, right. It was sweet. I didn't even do anything. I had like $200 on this, or I had probably $1,000, but whatever. But you look at Klanosaur's value, and I think I looked at today, it was like 3080 floor. Um, but if you look at Klanosaur like in March, it was like 100, right? So like I don't think you've seen the full weight of speculative froth. Like another way to look at it is like, okay, what's the chief meme coin on Solana Bonk, right? Probably like what percentage of that of Solana's market cap is it? Is it considerable to like comparable to like Ethereum's like Mania coin market cap? So like and then you say like, okay, like that's today, but what if you go to like, Nove 2021, like what percentage of market cap is Ethereum's like, system of meme coins then? And so like you have like, yeah, like Bonk's up like, was it, I think they looked, it was like 2,500% over the month. And it just hurts inside. It hurts, dudes. But um it's like, yeah, that's okay. It's like 2,500%, but what's the base on that? It's like what I looked at the value. I think the last one was like 260 million fully diluted. So think about that. Like Solana is like what, 30 billion, 33 billion now? I can't remember precisely, but that doesn't seem like a ratio that tells you it's like a speculative frenzy and froth yet. Like, yeah, short term, definitely. Like, you look at like funding rates, anything, like it's gone off the charts, bananas, bonkers. But yeah, I don't know. But like, think about how the valuation doesn't change. Valuation is just like, it's an exercise to like lose some sort of like understanding of how fundamentals of these things might work, like why they might be valuable. Not to give like a set in stone number, right? Just kind of use that and use it as a comparison metric. And then you glue it all together with like a qualitative dissection of all the different components that makes it interesting. And so that doesn't change from like the standpoint of like people buying and selling. Like, I mean, anyone's guess is as good as mine, but it seemed like, there was froth. It seemed like it was overheated. And I said that when it was like $37. So it's like, okay, like how does it go? Where is it? When's that? Let's stop. Like no one knows. But back to the original thing, nothing changes the valuation. Maybe you could make an argument that like is overvalued in its relative time frame. Like if you look at modular versus monolithic, going back to the like original question, like you look at the ratio, if we just bucket like, if you just bucket modular as ETH plus like its L2s, and then monolithic is like Aptos, Sui, and Solana, but the ratio has gone up a lot in the favor of the monolithics, right? I think it's like, you call it like 10%, 11% versus like before the run up was like 5%. Like people have understood the thesis and its value and kind of see like, okay, this is the differentiating factor between the two things. But at the end of the day, like you talk to any of the real devs are doing the same kind of thing end game eventually, to an extent. So, but yeah, nothing's really changed from that. I don't know. Does that answer the question, Sal, or did I just like talk about something else entirely?
No, that totally answers it. And I think that answer is actually something that's a view I've held for a long time, which is even dating back to FTX, really nothing fundamentally changed about Solana. Like the same stuff they've been working on and talking about, like Fire Answer, um, making the network more robust and less susceptible to outages. Like that's been being worked on since 2022, and they've been making consistent progress on that front. There wasn't some like crazy upgrade that changed the game, right? I think it's just people are coming to the slow realization that perhaps this approach to scaling is really a better UX, and it's easier to use, and developers are willing to use it. And I think the only thing that's changed in the last 2 weeks is that we're seeing, oh yeah, it is possible to speculate and have fun, quote unquote, on Solana. Because I think that's always been kind of a dig. Is like, what do you do on Solana? Well, now we have a meme coin that went up, thousands of percent in a very short period of time. Dex volumes are basically top 3 to 5 now consistently. So yeah, no, I mean they've really answered a lot of questions, and but yeah, the tech is the same. So whatever thesis one had, months ago, there's no reason to kind of change it up now.
Patrick, I was wondering, with the low fees and the higher relative throughput that you get with Solana, do you think that broadens the design space and broadens the types of applications that you can build on Solana? And therefore, does that like increase the potential markets that it can go after? And yeah, which areas particularly interest you?
I think it definitely does. I think it's very clear that having that the high throughput design space just gives you a bigger piece of canvas to paint your killer app on. And more importantly, like you want this idea of this constellation, this unified structure of applications all talking to each other and interacting. I think it's like a huge potential as offered by Solana. And like where that goes, there's just so many options. I think like the most interesting one is payments. And that's everyone's been talking about that since 2009 when Satoshi wrote his paper. But I think it's just really interesting. And I think like to me, it's like payments and then repo. Like you want like this, you want to like what are the problems we're dealing with now? Like what are the problems that like Venmo solves or Fed now? It's like you have this really poor structure of financial plumbing in the current system. Like you clearly need something better. You need a better way of settling transactions, of payments, of value, of exchanging them. Like you don't need all these different entities taxing that along the way. Like think about all the different ways in which like Western Union or Venmo or Block or whoever are taxing payments. Is a lot. And you compare that to Solana, it's nothing. Like, the biggest tax in that system will probably be like the fiat off ramp, right? And so if you can solve for that, if you can make that cheaper and make that a big so what, I think that's like the most high potential thing, particularly if you start like adding debt into it, credit card debt. You start having like all the different components of like why credit cards work, everything from ID to the lending pools. Like you could do that on Solana. You can make a really high grade like consumer payment experience potentially. You can't do that in Ethereum or the L2s. Like Gnosis Pay is trying that. Their credit card or their debit card is interesting, but I don't think you're gonna get the potential network size in terms of how many people can use it that you do on Solana. It's not even close. So I'm interested in those two things. I think something like repo makes a lot of sense too. You could probably do repo like an Ethereum or L2 probably, but like just thinking about like because I was like I trade treasuries, and the biggest takeaway that I have from treasuries is that like everybody's levered like 100,000 to 1, like crazy size, because you're basing like the amount of money you need to deposit as margin based upon the volatility underlying. And if you have like a cash 2-year bond, the volatility might move like in a crazy day, like 1%. I mean, I guess things have got a little bit more volatile lately, but if you have something in a spread, like you do the 2-year cash on the run cash bond versus like 2-year future, like how much money do you really need to hold at margin? Like how much is that spread going to really move? Like not a ton, right? So like people like are effectively getting like, large sums of money. Like where does that come from? Well, on the future side, of course, that's like the margin structure of the CME. There's no cash exchange, but the cash bond side, you need to have that. You need to have that money on hand. So you go to an entity that borrows it. Who do you get that money from? Well, people who have bank accounts eventually, right? That's essentially how the repo works at the end of the day. Like, and so like you put that on chain and suddenly like you talk about people needing to hold like large amounts of capital versus their crypto. right? Maybe like a financial institution, they want to participate on chain, they have to hold like some ungodly amount of capital. Well, right there, it's on chain. You can borrow money USDC. You can borrow treasuries for the overnight strike period and then unwind that and send it back out, right? So that's, I think, is interesting. I think just generally anything that has a platform that could just be disrupted that takes way too much money from the transaction standpoint, like can be disrupted too. Like I think Teleport XYZ is interesting because of that. Potentially even like a Helium. Like Helium failed in this first iteration because they went after a really dumb market, in my opinion. Well, because I say that like because they looked at LoRaWAN, they're like, oh, okay, the LoRaWAN bandwidth, like no one governs that, no one controls that, right? And so it's somewhere we can do that, and it glues to IoT. And everyone loved IoTs in like 2016, 17, 18. But if you look at like the implied amount of money that they would make out of that, because their whole thing was like, okay, this is a low cost network for low cost devices that are extremely cheap to run, and you want to charge them very, very little. But then like they combined that together and with like this really expensive network that was worth 50 billion at its height. And it's like, I don't think that like the underlying supply of data IoT devices will grow to be that. And I looked at a lot of different growth assumptions and it didn't seem to make sense. But with like, with cellular, it makes a lot more sense. It's gonna be tough to bootstrap now that they've kind of shot all their tokens.
Yeah.
But those are the things that are cool to me, like DePIN, something that's going to impact everyday life. And that's like also probably the toughest thing.
So let's actually talk about that a bit more. You brought up Teleport, you brought up Helium, and broadly DePIN is this space where it's like products and services that maybe we already use or are familiar with, but we're completely changing the economics. We're introducing perhaps a token incentive to incentivize different stakeholders, whether it's on the supply side or the demand side, to come together and provide this service at a cheaper cost, ideally to the consumer. And maybe it's using some open source version of the software that normally powers this. So in the case of Teleport, it's an open source version of all the software that connects drivers and riders and does the mapping and all that good stuff. So my question to you is, having worked in or analyzing crypto assets for so long, like how big of a, I guess, hurdle is it really to bootstrap these initial networks? Because at the end of the day, let's talk about Uber. Like at the end of the day, these are just incentives. And whether you're paying someone dollars, a bonus, or you're paying them in tokens, to them, it's just money. And we've seen in the past Uber kind of butting heads heavily with Lyft and just, who's going to pay out bigger bonuses and be more driver friendly. And Lyft kind of in the early days was the first to do tips. And then Uber kind of copied that approach and then opened it up to UberX and so on and so forth. But that's always been kind of the hardest part from their perspective is, can you get human beings, the drivers, to stay interested and engaged and using your platform to then make a great customer experience? Like, do you have any skepticism around, let's try to do this, but with tokens? Like, I guess, how do you view this thematically and how the DePIN space playing out, given that it hasn't really taken off in any sector yet?
Yeah, it's easy to be cynical. I would say it has taken off actually. Like I would say like, obviously the processing for DePIN is people running their own validators, right? Like there's hundreds of thousands. What's the number for Ethereum? Like 600,000 plus. And there's tens of thousands of other ones across. And that's kind of like the first use case. But, there's a cynic in me that likes it. It's like, it's a system that premises on speculation. And that's at the glue of it. That's the core. Everything's the glue today. Sorry. I'm out of vocab words. But that's the fuel. That's the fuel that makes it run, right? Is this idea like where you're part of this network and we have this meme that this network's gonna be big one day and we're willing to like invest in it in our own way, whether it's like a demo, which is not Solana, you get like a device and put in your car and it gets car data and then eventually the car data is gonna be worth a lot. But the initial part is like getting people to buy that device, right? Like Helium got to like, probably 1 million, they got to 1 million active, but I think it probably sold more than that. Like, I don't know if you remember with Helium, they had probably sold a lot more devices, but then their third party, like the manufacturers couldn't buy them because of the chip shortage. So Helium could have theoretically been a 3 million like hotspot network for its LoRaWAN network. And so like you have this like paradigm, like the idea why it's cool is that you're taking the infrastructure costs, you're taking all the capital investments you have to make as a company and putting it into the hands of people to do that because they believe they're going to get something greater of value eventually. They're going to get the speculative token that's going to go like up and make them be able to afford Bugattis or whatever, right? And so like that's tapping into like basic human nature. It's like the primordial like understanding of how people think and want and what they want out of the world that you haven't really effectively hacked yet. And I think you're gamifying this people's emotional understanding of outcomes, and then you're gluing it to narrative, you're gluing it to construction. And you know what it reminds me of? It's like there's this meme around, it's sweet. It's the one where it's like like you're a dad, you talk to your son, you're like, you're gonna marry Bill Gates' daughter. Have you guys heard this one?
I don't think so. I mean,
Okay,
I think I've seen like references to it. Yeah.
No, I hope we don't butcher it, but the one is like, okay, son, I'm going to tell you who you're going to marry. And son's like, oh, I don't want to marry anyone. Do you want me to, dad? Like, I'm my own person. He's like, you're going to marry Bill Gates' daughter. And the son's like, okay, how are you going to do that? And the dad goes to Bill Gates and goes, okay, I want your daughter to marry my son. And Bill Gates goes, oh, okay, well, why would I want to do that? And then the dad goes, because my son's going to be the CEO of the World Bank. And then Bill Gates is like, oh, okay, interesting. And then he goes to the World Bank and says, I want my son to be CEO of the World Bank. And they laugh in his face and they say, well, why would your son be the CEO of World Bank? And dad says, well, my son's going to marry Bill Gates. Like, you want him. And then so it's just like this construction of narrative that based upon these outcomes that may or may not happen. But as if you make people believe they're going to happen, to an extent, they're like self-fulfilling. It's like in back to geopolitics, it's like the Thucydides trap, where it's like, well, he says basically big powers have to always fight. But like, that's not necessarily true. But if people start believing it, they think they have to compete, then maybe it happens. And so there's this like element into these DePIN networks where if you meme it enough and people believe it's going to happen. Like, think about Chainlink. Like, Chainlink's been talking about like all sorts of nonsense of like being involved in Swift and all these other big names since 2017. But guess what? Like, they're making it happen. Like, I don't know if it's actually going to happen or if it's really that meaningful. Like, I kind of doubt that, to be honest, but they've gotten to that point where they're like talking to the CEO of the World Bank and saying, hey, like, our daughter or my son's going to marry Bill Gates' daughter, put me as CEO. And now people are like, oh yeah, okay. Like, think about that. That's incredible. Like, all that was done was through memes. And so I think with like DePIN and like making these things all work, like, you have this potential where these things could work all together. Like, you could bootstrap a giant DePIN network, and it's like, but they're fragile. It's like, why did Terra stop working? Well, Terra stopped working when people started selling it, and they suddenly saw the emperor had no clothes, and the false vacuum point actually was not the point of real vacuum. Everything collapsed. And so with this, like, that's kind of how I see it, that stuff playing out, is like, could it get there? I think it could. Like, people build buildings on this paradigm. Like, people always talk about Trump, and Trump like does this Bill Gates' daughter thing is when he was building real estate. Like, no one believed him. No one thought he could do it. And then he put it all together. That's what people do in real estate, right? So it's like, why not? Like, why can't it work? Why can't like the frogs peoples of the world like speculate and talk about something and eventually it happens? Because it could. It really could. And I think that's what I finally get is that, and then most importantly, is that there's like a reverse Pascal's gambit to this, where it's like, you're betting on the outcome being infinity awesome. Why not like put a few bucks on it, kind of stuff, right? I think that's kind of what people are looking at for this sort of thing. So that's why I think DePIN's cool, interesting. And then the piece of resistance is that you have these structures that like are just seem unfair to people. Like, why is Uber taking 40% of the driver's money? Like, that doesn't seem fair. That seems absurd. Because they own a network, because they have a network effect. Okay. But like, let's build something better that treats him more equitably, that puts more money in the worker's pocket, or whatever like anti-capitalist slogan you want to adopt. Crypto enables that. Like, you can have that. Like, you can do that. You can make it cheaper to direct people to these things. And so like, that's like, I think the big so what is that you have these rent-seeking taxing entities that have enormous value that extract value from people, users, workers, or whatever that can be disrupted. And that's, I think, like the heart of all crypto.
Very well said.
And obviously another aspect is that Sal was saying you can just pay people with money, but if you want to bootstrap a network before it exists and before there's any revenue, you need to get that cash from somewhere. Whereas with crypto, you can give away free tokens with this speculative angle associated with them. So yeah, I think it's a genius way for capital formation to arise. How do you think that crypto is going to how's it going to reach these 2030 levels, I suppose, is my underlying question here. Do you think it's the institutions are going to come in? Is it going to be a Bitcoin driven rally? Is it going to be, as you said, consumers trying to evade the 40% tax and getting over the sort of UX hurdles and the complexity that's inherent with crypto? How are we going to break through from this small little niche of people that we've been chatting to on Twitter for the last couple of years?
Yeah. Yeah, it's the same thing. It's like, look at the crypto price. There's like, 50 different whales trading things back and forth to an extent. There's not like a ton of players, but I think it's just, you get the ball rolling, like on the speculative angle, people start getting involved, people start getting interested in it. I think about my own trajectory of the space where, I started in 2015. I bought some Bitcoins for like $400 and I did great. I sold them for 1,000. And I converted them to Ethereum at like, ETH 0.3 or something, whatever the high was. But, it starts with the speculative journey. And then at some point, like people will start thinking like, why is this have money? Like, why does this have value? Why is this interesting? Like I just traded until basically DeFi summer took off. And then I started looking into it and reading about like what Chainlink is doing, what Polkadot is doing. I actually went all in Chainlink. Every dollar I had out of 401k, I won an all-in Chainlink in July of 2020, and it proved to be really, really bad. Not bad from the standpoint I didn't make money, but it didn't go up compared to like ETH.
Yeah, trust me, you're not the first person from 2020 that in my own network that went all in on Chainlink and was a little disappointed with the what happened next.
Yeah, it led the bull market, didn't it? I think it started before anything had happened, really. It did like a 20x and then didn't really do anything when the bull market actually arrived.
Yeah, I started buying at like $4, and then like Thanksgiving it was like 15, and I was like the guy with like 5 whiskeys deep that was like, guys, Chainlink, look at this meme, World Bank, and everyone's like, oh, okay, all right, have fun. Go back to mom's attic kind of attitude.
Oh man. So what are you going to be talking about when you're 5 whiskeys deep this Thursday then? That's what I want.
Probably DePIN, probably the pitch to disrupt the platforms, give money back to the man. Huey Long capitalism for the people. I don't know. I like crypto right now. Like what gets adoption? Besides the user stuff, it's this sovereign money thesis really coming into play. Like I mentioned 100%. It a little bit earlier. Yeah, right. Like we can talk about like all the bad things that like Russia or whoever did in the world, Iran, and they're bad. Don't get me wrong, but it's like if you go back to credible neutrality of a money system, you need credible neutrality. You need rules. You need order. You need to have that. And from 2 points, like when you violate that credible neutrality, which the U.S. has done, you start raising questions about the credible neutrality of that system, and people start thinking, well, we want something else. And you have crypto, which now offers you that opportunity for something else that might develop. And I think it's a huge paradigm that might start bringing active interest in crypto. It hasn't quite materialized yet. Maybe it never will, but it's potentially bigger than it was before. And the other issue, the thing is that's getting popular, is it's like 1900 again. It's populism, right? There's no Williams Jennings Bryan or whatever his name talking about crosses of gold crucifying us yet, but we're having similar talks about the currency depreciation. I guess back then it was the opposite, but you're having this populist movement form. People who are like, yeah, like why am I paying X percent to this when they hate me or I don't agree with their politics or whatever? I have this other system that's like neutral. Like why would I go for that?
Yeah, I mean even just yesterday. in Argentina,
Mm.
Javier Milei talking about moving to the dollar. So it's just another check mark, another case in point that there's a groundswell of interest in, I guess sounder money. Um, and I think that's long term pretty bullish for crypto, even if in the short term it has nothing to do with crypto. Um, so we covered a lot of topics. One thing I wanted to get your take on, just as someone that's pretty plugged into the institutional world at the intersection of crypto, is like help us make sense of whatever you want to call this bull run. I mean, it seems like an early innings of a bull run. It feels to me like it's been driven mostly by institutional interest. It doesn't feel like retail's even engaged that much with this. Whatever metrics you look at, whether it's just anecdotal. I mean, I think a few people are starting to talk about it, but still it's not quite there. Google search interest versus like open interest on Bitcoin, for instance, hit an all-time high. And the inflows just seem to be coming from bigger players. So help us make sense of what are things looking like in terms of the institutional side of crypto in this bull run, and how do you see this kind of market dynamic playing out over the next year or so?
I think for like I go to like events sometimes in the city, um, and I go to something like Avalanche. Like they have like a dinner. They do a great job of BD, and I see people from institutions there. And for the longest time, it was always like, oh well, what are they doing here? There's nothing here. And I talk to them, and they can't say anything, obviously. And it's just always like, well, there's nothing going on. But then, like increasingly, you're seeing more programs, more pilots, more things that are showing that they're experimenting in the space, and they're starting to get a lot of so what's for ways in which that they could save money or attract new customers or whatever else. Like, and so you're starting to see like this play out a bit, like faster and faster. Realistically, a lot of these things that they're announcing are little more than like experiments or tests. Like even Visa's case, like Visa, if we unpack it a little bit, like Visa just sees Solana as like another network to settle on, one of thousands. It's actually not as impactful as you'd suppose, but it's interesting that like
Yeah.
they're starting to take notice. And like for me, like seeing like these people like really get interested in it, like that shows that they care about the space. Um, I'm trying to think what else. So I think that like it's good and bad for crypto, for the tokens at least, because like a lot of people again suppose that the institutions will come into the space, right? That could happen, it could not, I don't know still. I think it is going to happen. But the problem is they might do things in ways that do not use like public blockchain systems as they are today. They might just have like a labs entity built like on their own kind of private blockchain or their own kind of data settlement streaming network of prices or whatever, right? And so like that's kind of like my fear. That's the bear case. But I think in terms of like interest in this space, you're definitely seeing people talk about it, talk about at least investing in like this is like a sovereign money layer. And I think at the heart of it, they won't say it, but I think BlackRock understands tangibly that you're violating the incredible neutrality of the US based system is going to have some effects down the road. And they might want to kind of diversify their offering to looking at things that people might want to invest in outside of it. Um, so in terms of like, real adoption, not seeing a lot yet. Van Eck is an institution. We are doing a lot of interesting things. We have an NFT project called Segment. We have our funds. We have lots of funds in Europe. And so we're trying to push a lot of so what's like things that we've talked about before, everything from stablecoins, tokenization of assets on chain. And for those, like we couldn't get a lot of so what, but I think other players might be able to scale those more effectively than us, right? And so I think going forward, you're going to see this, but with institutions, they're just going to follow the money goes and the users are. If you get like more speculative, like movement in price, more people come into the system, more people start interacting with it, more people start keeping money on Solana, then they'll say, well, we need to offer them services. And I think that's kind of what you'll see going forward is slow adoption and then non-sovereign money thesis play out. And then potentially like something happened that betrays token holders or they built something that doesn't accrue value to the price.
It'd be interesting just to get your take as well on the regulation side of things, because I think Coinbase have just released their KYC product on Base, and I know that Solana with their token 2022 that will also allow certain programs to have an allow list basically of people who have been KYC'd. So it feels like we're integrating ways in which you can incorporate KYC. So do you think that regulation is a big hurdle still for these institutions, and do you see that going away over the next couple of years?
It definitely is. It's a huge hurdle. Like talking to someone like Akash. Akash is doing like GPU compute stuff, right? And their biggest issue, and the biggest issue for a lot of stuff in general, is that entities they want to build there, they can't hold a token. Like think of like the corporate structure of holding a token so you can do something. Like, okay, who's going to be in charge of that? Is that a treasury function? Who's going to manage that? Who's going to manage the wallets? Like, how do they justify holding that like very volatile asset? Like, how do they justify like paying someone an asset? And so it's like it's a big hurdle for a lot of people to have that. And that's like the non-financial. For the financial, like you start to see the solution case, like decentralized identity, or like a KYC list, very like beast. So I think something like Coinbase having like apparently 108 million verified users is huge. That can be massive, but like for centralized identity, we still haven't seen anything that like really makes it interesting yet. But I think like that could be another massive use case for crypto, is this big marketing tracking. So what is where people start opting in using their wallet to be tracked and then getting paid, or like by, something similar to Demo, where all the user data is somewhere. And if you want to tap into that, you have to like use that third party system. There's some projects building that, but I won't mention them by name because they don't talk to me and I don't like that. But I think it's like a big so what for the space is like you lose tracking across the internet when you started implementing more privacy. But realistically, like how much people really care about privacy, I don't know. Probably not that much. And if you incentivize them to not be private, then it's like if you're like, like think about like the value of like Facebook in terms of revenue per user. Like imagine you're like a high value user, like you're like, I don't know, like someone that provides a lot of value to YouTube. Like what's that split? Like what's Mr. Beast's take rate? Is he getting a good take rate on that? Like, I don't know.
Well, I believe for YouTube specifically, it's like 50% or so, 50 or 60.
Yeah. Like a cool app that no one's built yet is like, imagine something like, I don't know. I mean, everyone's like, oh, someone's got to build this app. It's kind of like, douchey to say, like, why is no one building this, bro? Like building's hard. And I really respect builders and all the things they do. So I hope it's not taken that way, but like a really cool app would be like, imagine SocialFi, where you're gambling on people's profiles. You get to talk to them for a bit. But what if it wasn't just that? What if it was like Cameo, where you could talk to like a celebrity for a bit? Or what if you had some kind of contract way of enforcing that? Like for me, like I like to barbecue, right? I like to do smoking meats and stuff. Like what if like I was having problems with my brisket and then I want to talk to the Franklin guy, I forget his name, the famous barbecue guy, for like 10 minutes, like, hey, what do I do wrong? And he got paid for that in like crypto. And there wasn't some platform taking like, 80% plus his firstborn.
Yeah, that's fair. I haven't been to Franklin's barbecue. You're talking about the one in Austin, right?
Yeah, dude, but the guy who makes that stuff, he has like a pretty rad bunch of YouTubes and smoking meat. Like it's such a thing. It's like a really difficult process and there's so many factors involved. And I had like a little crypto get together a few weeks ago and I smoked some things and some things turned out and some didn't.
Man, I would love to go to the next one, man. I love smoked meats. So, and I understand the labor that goes into it. It's hours, right? It's like 24 hours of just slow smoking it and stuff like that. The wood factors into.
Yeah, it's like the wood, the wind, the temperature, and then like the fire go out. Are you gonna do it overnight? It's like you gotta prep the meat. You gotta get the meat cut up good. You have to like figure out the good rub you want. And then you're constantly checking it. And then I made a bunch of sides. So I made 3 meats and like 4 sides. I think I did collectively probably like 15 hours of cooking and stuff.
Oh my God. It's insane.
Yeah, especially hard. My wife was yelling at me. She's like, why aren't you doing work for me?
It's a labor of love, man. The meat.
Yeah.
But I think the point you're alluding to, I live in New York and I just don't have the patience to stick through an 18-hour cook. But I love the output. I love the output. Let's put it that way. I think the point you're alluding to is an interesting one that I don't know the answer to, but what is the value of aggregation and curation versus the utility of networks like YouTube or Cameo or what have you, Uber? And I do push back on the notion that they're not valuable at all. It's decentralized at all, and that's called a day. I think there is some balance here that's probably why none of these have taken off, any of these like decentralized social protocols or SocialFi, because it turns out centralization and aggregation and curation is probably most of the product, especially for YouTube. Like you go there to have it tell you what to watch, not to like use the search bar. But I do think we are skating towards a world where that becomes decentralized. So I think both things are true. It's unclear what that final product vision will be, but yeah, I mean, it's an interesting point for sure.
Yeah, I think with like definitely with YouTube, like that's a really good point, the aggregation, but like, and then the content that you want to see. Like obviously sometimes it sends you like things you don't like, but I've definitely gone through some like awesome rabbit holes that taken me to places I want to go in surprising ways.
Me too.
Like I like synthwave. I like that. I'm like one of those people.
Oh, nice.
So I found some cool things because of YouTube, right?
Yeah, exactly. And it's good at also just like understanding, all right, yeah, I'm tired of this. Then move me on to the next rabbit hole, right? Like that. There's a lot of power to that, and you know, we could have a whole episode just on that stuff. Like it's almost like AI, which is a centralizing force, versus crypto, which is decentralizing. And for YouTube to have such good algos, it needs consistent training data, which means you stay on their platform and you browse and they connect it to Gmail and search and all that. But regardless, I mean, I think, you know, we touched on a lot of really interesting topics. It's been a super fun convo, Patrick. Really appreciate you coming on. Do you have any kind of closing thoughts for us as we kind of skate into what seems like the next bull run, which I can't believe I'm saying this, compared to where we were just 3-4 months ago?
I think it's going to be a bumpy ride. I think the political situation in the United States is going to dictate what happens next to an extent. I think there's a lot of sidewinders that could happen for both the market that we haven't thought about yet. That could be bullish or bearish, and that, you know, make sure that like what you're looking at makes sense, and that you set some sort of point where like you have max pay and you get out and you don't let it go. You don't lose more than you can spend. You don't put your mom's money on things that go down, only up, right? Mom's money goes on things that go up. And you just make sure that like you do your research in a way that like makes sure that you understand like how the token makes money and why that makes sense. And the use case makes sense. The use case makes sense. Sometimes tokens, but the product doesn't mean the token will make money. And so, and I would be really cognizant of community, like how powerful that community is. Like everyone talks about Solana's community now, the cockroaches of crypto, because they survived, right? Like they went into the extinction event and came out strong. And I think that's kind of like a good way to look at these things, and just be completely aware of where you're putting their money. Like just be sure that you're gonna make the right choices, but no one does. And so I just wish everyone the best of luck. And I don't want anyone coming to me and being angry because they think I like something and I didn't, but it's bound to happen.
For sure. Wise words indeed, though. I think we just have to learn through trial and error. But thank you again, Patrick, for joining us. It's been a really insightful conversation.
Yeah, thanks for having me. I'm available for $100,000 an hour speaking fee. I do weddings, bar mitzvahs, brisses,
oh man,
Christmas parties, anything.
Lock you in for a breakpoint next year then.